Welcome to the Kapital News. I am your host, Alex Karitis. Today is September 9th, 2019. Thank you so much for joining me. I know I've been away for the past few days. As many of you may have come aware, I did have, threw out my back last week. Not too thrilled about that, but I am allowed, I can sit down again, thank God. And so I'm happy to be back here today to get these podcasts back on the road. We have a lot to discuss, so we're going to get right to it. But before I do, I just want to send a shout out to all of those who actually have taken the time to buy our book, The Cynic's Guide to Investing in the Era of Too Big to Fail. It Pays to Be a Cynic. Now, while we had written this book, it was published back in 2015, it holds true very much to today, and we imagine that it will hold the test of time as we progress here through these very volatile and turbulent financial and economic times. So I want to thank you for doing so, and obviously would love for more and more book sales to take place, hardback, paperback, and also an electronic Kindle version, and you can find that on Amazon.com or BarnesandNoble.com as well. So thank you to all of you who have been purchasing that book. It does support this channel very much. So straight to the market news. The S&P was flat. The Dow Jones Industrial Average gained 38 points today. The NASDAQ gained 16. Although the Russell 2000 gained 19 points, which was an increase of 1.3%. So again, quite the divergence here between the big boys and the small caps. So what's going on here? We also had a big move, a 2% move to the upside in the Dow Jones Transports, yet the New York Stock Exchange was relatively flat as well, gaining 27 points for the day. We're going to talk about some of these divergences and what we might be witnessing here. We also have oil, which has been on a tear recently, the past few days. And we now have WTI trading at $58 a barrel. And Brent, the international oil metric, is at $63 a barrel. We haven't seen these numbers in quite a while. So what's going on here? We also have gold slightly below $1,500 an ounce, trading at $1,497 an ounce. Silver has also pulled back and is now trading south of $18 and is at $17.93 an ounce. Now, I have said repeatedly on this podcast, especially since I've called the precious market bull run, which I believe we are in the midst of, the very, very early stages of it. Just a matter of time, I believe, before the rest of the market catches up to the fact that central banks are going to be printing money at will, at bigger doses, that we are going back to the zero bound here in the United States, that they are going into deeper negative territory in Europe, in Japan, and elsewhere. And a safe haven, a hedge against this, is going to be the precious metals. Now, I've also said repeatedly here that nothing goes straight up and nothing goes straight down. So to see the markets go straight up like they have, you expected a pullback, and that's exactly what we have witnessed over the past few trading days. This, in my opinion, ladies and gentlemen, is a buying opportunity if you haven't gotten into the precious metals market space. We have a long way to go to the upside, in my opinion. But as I always say, conduct your own analysis and consult other professionals. But this is just, to me, the sign of things to come. Now, right now, because we have this divergence in the stock market right now, at least for today, with the difference between the small caps and the larger cap stocks, typically this is going to witness, it's going to say, we're risk on, right? There's a lot of appetite for risk. If the market is willing to bid up the price of the small caps and the Dow Jones Transports, then maybe the markets are turning a little bit more bullish, that they think everything is okay, that we have passed some sort of corner where now everything is fine. We are out of the woods, that we are no longer in the danger zone, that everything that we've talked about here on this podcast for the past several months have come to a pleasant conclusion. Of course, this is not true, but this is the market's interpretation, at least, of what we are witnessing here today. That's why I say always that one day's worth of data does not make a trend. So we will have to see what happens over the course of the remainder of this week. So a lot of things to pay attention to. Now, the U.S. 10-year Treasury gained 5%. Of course, we're talking about the yield, and it is now yielding 1.622%. 1.6% was only a week or so ago. It was below 1.5%. Now, you have to understand that there is an inverse relationship between the price of a bond and its yield. So if the price of the bond gets bid up, now you have a higher price, the yield goes down, and conversely, the opposite, okay? So what we're seeing now is a selling of bonds. What we saw over the past couple of weeks was a large amount of bond buying. People were looking for safe haven assets. Again, this whipsaw market. We're heading into recession. Nope, everything's kind of cooling off. And now, everything's fine. So let's get out of bonds. Let's get out of the safe haven precious metals. Let's get into oil because everything's going to be okay. Let's forget about the large caps. They're the old dog in town. Let's get back into the small caps. And let's get back into the Dow Jones transports because everything is fine and dandy. And we're going to have transportation and everything being moved from point A to B and back and forth as far as the eye can see. Now, what happened? What's the headline? What did Thunder Thumbs tweet? Nothing. Nothing surprisingly here. What we have witnessed last week was the fact that Thunder Thumbs says, well, we're going to have some more trade talks, which is what we've been hearing for a year and a half, with no conclusion. In fact, it's been nothing but escalation. Yet we have the markets once again clinging to hope that everything is going to be fine this time. We've also had confirmation from the Chinese that the talks will continue, that there's going to be a lower level delegation that is going to have talks this month in September. And then the big boys are going to get together sometime in early October, at least that's what we're told now. We're talking about our trade representative and our Secretary of Treasury who have been leading the talks on our side with the Chinese senior delegation. They will be coming here to Washington, D.C. to continue, I believe, for the 13th meeting. The 13th meeting. So we've been jerked around for 13 times here. Is this going to be lucky number 13, unlucky number 13? We're going to find out here in a few short weeks. But that's all these markets are clinging to, folks. If they pay attention to the underlying economic data that we talk about here on a daily basis, the markets go south. If Thunder Thumbs comes out and tweets something positive, the market goes up. If China comes out and maybe says something positive, the markets go up. If we have some sort of tension that sort of relaxes itself, primarily over here I'm talking about the Hong Kong protests, because we had the Hong Kong chief executive, Carrie Lam, last week formally withdraw that extradition bill, which has been causing so much civil unrest. However, the protests continue into their 14th week, and we're going to talk about that today here as well, because the headlines that we're going to talk about are the U.S. jobs report, because those numbers came out Friday, but of course I've been missing the past few days, so I want to dive into that. Further updates to Brexit. There was a key vote that took place this evening. The Hong Kong protests that continue. The U.S.-China trade talks. The Federal Reserve is now in a blackout period. We're not going to hear anything from any member of the Fed, at least we're not supposed to, until their meeting, which is going to take place, September 17th and 18th, and we're going to have a decision there. But nevertheless, before the blackout period, we did have Jay Powell, the chairman of the Federal Reserve, over in Switzerland, give a Q&A session, and so we're going to dive into that a little bit as well. We also want to talk about the U.S. and Afghanistan deal or no deal, and then some Israeli politics with some of the saber rattling that's going on over there with the recent bombing in Lebanon and now the trumped up talks with Iran. So a lot to get to, but first we're going to talk about the U.S. jobs report. The number came out as a gain for the month of August of 130,000 jobs. That is the preliminary estimate that we had received from the Bureau of Labor Statistics, slightly below what the market was anticipating. However, the unemployment rate, the U3 figure, that is the headline figure, remains at 3.7%. I find this a little perplexing, to be honest with you, why it has remained at 3.7% while we have just become aware of a major revision to the jobs data over the course of the past year. Remember, we talked about this on a few other podcasts where the Bureau of Labor Statistics put out their final numbers, and we've had 500,000 fewer jobs than what was previously reported. 500,000 fewer jobs. This is not a drop in the bucket. This is a big number. So the fact that the unemployment figure still stays at 3.7% is somewhat perplexing, but nevertheless, it is the number we have been informed of. However, the broader number, the U6 figure, which we also talk about here, did tick up a couple tenths of a percent and is now at 7.2%. It was previously at 7% and is now at 7.2%. This is also something that we had focused on in one of our recent presentations, video presentations that we have posted to thecapitalnews.com and also on our YouTube channel, The Capital News, where we asked the question, has unemployment bottomed out, graphically speaking? That is to say, is it now going to start ticking higher and higher? Because if it does this mean that we are going to be headed towards a recession? You have to understand that unemployment is traditionally viewed as a lagging indicator, not a leading indicator, but a lagging indicator. And you can see this very well. It's prominently displayed in any chart that you look at. And again, it's displayed in our video presentation, where you see that unemployment will typically top out. Just say it'll go up to 9 or 10% in a steep recession, but it will actually continue going higher after the end of the recession. And that happens, again, because it is a lagging indicator, not a leading indicator. But nevertheless, just from looking at some of the history and some of the historical trends that we have witnessed over the past decades, several decades, where we have this data and we have obviously recessions, several recessions have occurred over that time period, we can see how long it typically takes once unemployment has bottomed out, when it starts ticking up, as to when we are likely to find ourselves in recession. And just the way that we called it, just simply by looking again at the historical data, we said that unemployment gives birth to a recession. So once you have that number bottom out, expect about 9 months is the historical average as to when the United States has found itself in another recession. Now, for this discussion, if unemployment has bottomed out, that number was hit back in April. So a 9-month period from April was going to take us into about January of next year. You have to remember that the last recession started in December of 2007. That's when it was officially called by the National Bureau of Economic Research. Now again, these recessions are not called the month in which they occur. Should we find ourselves in recession in January of 2020, the National Bureau of Economic Research isn't likely going to say that we're in recession, excuse me, until several months later. At least several months later, because of all of the revisions that take place with all of this economic data, whether it's private data or public data. It could take up to a year. So now you're really getting into a time crunch as to when a recession is actually going to officially be called by the National Bureau of Economic Research, because 2020 is a presidential election. So if it does take place at the end of this year or at the beginning months of 2020, it's going to be very close to the wire, because the election is going to take place in November. And by that time, you're going to have multiple revisions. So is the National Bureau of Economic Research, are they going to put themselves into the middle of that political storm? So that's a serious question that they would have to contemplate. Now, a technical recession would be comprised of 2 consecutive quarters of negative growth, which could happen. And if that does take place, even if one negative number prints over the course between now and November of 2020, Donald Trump is going to have some splaining to do. But of course, he's going to blame the Federal Reserve. He's going to blame China. He'll blame your mother. He'll blame small business. He'll blame anybody but himself. So we at least know he's going to take care of that. Now, continuing with the U.S. jobs report, we had 96,000 jobs created in the private sector. Okay, so the remainder were in the government. And 25,000 of those jobs are temporary jobs for the 2020 census taking. So that's given it a little bit of a boost. So you take those numbers out, this was not a very strong report at all. Now, of course, the spin doctors were out for the Trump administration. Larry Kudlow was out. He was on all of the financial mainstream media on Friday, and I think he was even on a couple of times, because this was not a great number for them, but they wanted to spin it as much, and they were pointing at some of the hours worked and some of the wage increases that were true. There have been a little bit of an increase in wages. Has it outstripped inflation? No, it has not, but nevertheless, it's still better than nothing. And so that was sort of what the White House was clinging to, and talking about a slight uptick in hours worked. Now, the interesting thing that we have to understand in this as we make our way through the end of a business cycle, and again, folks, this is okay. Recessions, I understand, they're painful. Nobody wants to go through them, but they are a healthy piece of the process. We have a number of malinvestments. We got to have a number of zombie companies that are continuing to operate that are not doing anybody any favors. Okay? So this is healthy to get rid of the waste and the fraud and the abuse. This is a way to do it. And simply kicking the can down the road and telling everybody it's rainbows and unicorns is just not a good strategy, believe me when I tell you, because the further we kick this can down the road, the bigger the problem's going to be when we have to face it, and we will face it sooner rather than later. But when you're at the end of these business cycles, what you'll typically see here is instead of employers rushing to lay their employees off, most employers do not want to fire or lay off their employees. They don't, because they don't know when the winds are going to change back in their favor, and they don't want to have to fire somebody and then bring them back and go through all that hiring process. It's very time consuming and very costly. So instead of laying them off, they might say, okay, well, you know what, we'll let you work more hours. Instead of going out and hiring more people, we're just going to put a hiring freeze on, but we're not going to lay anybody off, but we might have a little bit of an uptick in hours. That's what we're starting to see, okay? If this continues in the manner in which I believe that it will over the ensuing months, you will start to see layoffs tick up and tick up and tick up. If you look at some of the other reports out there from the private sector, you are starting to see an increase in the number of layoffs that are about to be announced. Okay? I think it's Challenger, Gray, and Christmas is the report, something like that. I believe those are the three names. Whether I got it in order or not, I don't know. But Challenger, Gray, and Christmas is a private employment report that tracks a lot of the layoff announcements, and you can find that. You could Google that. They're obviously on the internet. But there was an uptick in their numbers in expected layoffs in the coming months. So, again, that's not surprising for us here. So that's something that we will continue to monitor, where this is playing out as one would expect. This is the business cycle, folks. It doesn't matter who's in the Oval Office. The economy is bigger and more powerful than all of us, no matter who attempts to manipulate it. And, of course, any type of manipulation is in the wrong direction as far as I'm concerned. So that's the U.S. jobs report. Now to Brexit. We had another vote. I told you we would not hear the end of Prime Minister Boris Johnson. He wants a general election to take place, which ironically is also what the leader of the Labour Party has been calling for the past couple of years. Of course, he never got it, and of course the leader of the Labour Party is Jeremy Corbyn. Now he's sort of boxed himself in. Prime Minister Boris Johnson is saying, well, look, you've been calling for a general election. I'm willing to give it to you. And now you have Jeremy Corbyn saying, no, we don't want it. This is a big political ploy. We're not playing these games. We don't want it. So there was another vote. Again, this vote got shut down, I think it was just last week or a week and a half ago. Nope, there's not going to be a snap general election. But I told you that Boris Johnson would bring this back to the floor in Parliament, and he did. And they voted on this once again this evening, and it once again got shot down. So there's not going to be any type of snap general election, which would have been slated for October the 15th. And you have to recall that Brexit, the deadline, the hard deadline, is for October 31st, Halloween trick-or-treat. Okay? Now, I use the word hard loosely because we were told that there was a hard deadline back at the end of March of this year. And of course, then Prime Minister Theresa May did what she did, kicked the can down the road. And here we find ourselves with the next hard deadline at the end of October, which will be here before we know it. Now, you also have the markets whipsawing back and forth, thinking that there's going to be a deal with the EU, and then sometimes, no, there's not going to be a deal with the EU. And sometimes, folks, when you pay attention to this and you watch the financial markets as well, because you pay attention to two things when you're focusing on Brexit. You pay attention to the strength or the weakness of the British pound, the currency market, and you pay attention to the FTSE, the FTSE, which is their stock market. Sometimes when you have the pound weakening because they believe that there is going to be a hard Brexit, a no-deal Brexit, the pound gets put down. It gets sold off, okay? And then you have a weaker pound, and then you might have the stock market actually rally because it makes their goods more competitive around the world, okay? Sometimes you see that divergence. Sometimes you see a different correlation. Sometimes they both go up, sometimes they both go down. This is a market where I've been telling you guys since I've started this podcast back in February of this year to look out for a decoupling of economic and financial variables. Period. End of story. these headlines, a lot of this just doesn't make sense. And this is what happens when you have trillions of dollars in negative yielding debt. This is what happens when you have central banks in control of the ship to the degree at which they are. This is what you're going to see. So, I mean, for me to personally predict what we're going to see, I don't know. I've called a couple things that I thought we might see. I said, well, we might actually see a stronger U.S. dollar and stronger precious metal prices, and that is exactly what we have witnessed. We have seen a stronger U.S. dollar coupled with higher precious metals prices. How long can this continue is anybody's guess, but that was just one of the things that I said might take place. Now sometimes you see, again, a weaker pound, a stronger market, a stronger pound, a stronger market. So making heads or tails, anybody's guess is as good as the next guy's. And that makes it dangerous. That makes it dangerous because these markets, while they are random, are supposed to follow some sort of fundamental. And right now, they are completely decoupled from the fundamentals. Unless that's all they have to focus on. Okay? If it's headlines, if it's thunder thumbs, if it's political, geopolitical nonsense, the markets are going to cling to that and run accordingly. But if it is the fundamentals, 9 out of 10 times, these markets do sell off. The simple question is to what degree. So, now with Brexit, we have no general election. The Prime Minister, again, has put into prorogation, that is the British fancy word for they have suspended Parliament. They have suspended Parliament for a month. What we will see next, I believe on October 14th, the Queen's speech. So, if you want to see a show, excuse me, if you want to see these people get dressed up to the nines, if you want to see Shakespeare in action, stay tuned to the Queen's speech because she, I'm sure, will be wearing the crown jewels. I don't know where this takes place. I'm sure it's in Parliament. If it's in the House of Lords, you will see how extravagant that place is. So stay tuned to that. It'll be something to see. Like I said, this is the land of Shakespeare. Let them do what they want to do. The Queen's old. How much longer does she have to go? Who knows? So that's the Brexit nonsense that continues. Now, we also have Hong Kong. Again, these protests are continuing for their 14th week, despite the fact that the chief executive of Hong Kong, Carrie Lam, has formally withdrawn the extradition bill, which caused a lot of this to start. Of course, that might have just been, the final straw that broke the camel's back, so to say. But these protests are continuing. And what we have witnessed most recently is that these protesters are now marching around the U.S. consulate, chanting USA, basically in calls for the USA to free Hong Kong from mainland China. This is getting very hairy. What's going to take place here? Excuse me, they have to continue with this argument of free Hong Kong, and now they are bringing the United States into the fold, much more directly than they were before. I mean, yeah, you've seen some of these protesters with American flags or some signs talking about the United States, this, that, and the other. But now they are marching around the U.S. consulate and really talking and almost demanding that the U.S. get involved and free Hong Kong from China. I mean, this is not a good time right now, I guess you could say, for the United States to get involved with this directly at a time when you have these trade talks supposedly moving in the right direction. Now, I don't believe they're moving in the right direction. This has been the story we've been told for 13 months. You want to continue to be lied to, be my guest, but I'm not going to be suckered into this. Again, I've been out of this pool for a long time. I mean, fool me once, shame on you. Fool me twice, shame on me. I mean, you got to wake up to this point that this president and this whole game here it's just a game. He's just stringing you along. This trade war was supposed to be easy. That's what he told us. So now this throws another wrench into this because there's no way that China is going to give up Hong Kong. We've already had words, not only from the president, but from Congress, even before they went on vacation, saying, look, there cannot be further escalation. We need to stand with the Hong Kongers, and that China cannot throw their military might behind this to try to disrupt these protests. So this puts the United States in a little bit of a pickle here as to who are you going to support? What are you going to do, because I also believe, and I believe this strongly, that the United States is somewhat behind these protests. Now, of course, I believe a lot of this is organic. I believe a lot of the people in Hong Kong do not want to be heavily involved with China, that they want to maintain their autonomy to the degree that which they can. But nevertheless, I mean, this was just right pickings, I believe, for one of our intelligence agencies to get over there and to help undermine this movement and to get this movement, give it some legs and to give it some more publicity over there and to cause a little bit of a problem for China to see how they would respond to this. Now, has it gone too far in pushing these Hong Kongers to believe that now it's the role and perhaps even the obligation of the United States to stand with the people of Hong Kong to free them from China? I mean, that happens, you're talking some serious problems, believe me when I tell you. But we're going to keep you posted on that. But that's just another little wrench in the wheel here with these U.S.-China trade talks. And so what do we know with these U.S.-China trade talks? Not much. It's the same song and dance. Again, the low-level talks set to take place some point this month, and then the big boys sit down at the big boys table at some point in October here in Washington, D.C. Is anything going to be resolved? I highly doubt it. Tariff man has slapped on more tariffs. The Chinese have slapped on more tariffs. What we have been told and what we have known for months is that in order for there to be a good faith deal that actually takes place, that the U.S. would have to remove all tariffs. Now, it's my understanding that the tariffs are a huge sticking point for Tariff Man, but also other members of his administration, because they are going to look at the tariffs as part of a stick and carrot methodology tactics, right? Yeah, we'll take maybe some of the tariffs off, but we're not going to take all of them off because we're not going to believe you. Because you told us you were going to buy a whole bunch of U.S. agricultural products. You didn't. You said you were going to do this. You didn't. You said you do that. You didn't. 25 years of stealing our intellectual property, this, that, and the other. You know the argument. For Donald Trump to remove all tariffs would make him look extremely weak, and I just don't see when or why the Chinese would then, simply give in to everything. They could just buy more time, say, okay, well, we have you where we want you. Again, this could be rope-a-dope. They could continue to play nice. What's it cost them to fly back and forth and have a couple meetings? Not that much, and that's exactly what we have witnessed over the past year and a half here. So I think it's going to be the continuation of this. I think this is something that Donald Trump and company has to be aware of, and I hope they are, that they could be rope-a-doped here, because China can string them along well into 2020, again, a presidential election year, and at the last moment, just boom, dumb, we're escalating, we don't like what we see here, we're going to remove ourselves from the negotiating table. You will have, a huge sell-off in the stock market, most likely. You will have the Democrats saying, look, this guy's no art of the deal maker here, he's terrible, he told you these things were going to be easy, he's been lying to you for over a year, 2 years at that point, if not longer. He doesn't know what he's doing, and now, a huge trading partner in the second largest economy in the world is now once again at odds with us, so that would not bode well for the Trump campaign. Politically speaking, and I really don't like saying this because I don't like trade wars because nobody wins, but politically speaking, Donald Trump would almost be better served not getting a deal, because then he could once again continue to bash and blame China. I mean, he has them as a boogeyman. If he does come to some sort of agreement with China, then there would be no reason, as far as I could see, why the Federal Reserve would want to lower interest rates. I mean, their main argument last time for cutting rates was the trade uncertainty and everything that was around that. Well, if there's some sort of miraculous deal and you're going to have the stock market take off, there would be a huge relief rally making new highs. There would be simply no justification whatsoever for the Federal Reserve, or really any other central bank for that matter, but definitely the Federal Reserve, to continue to cut interest rates. None whatsoever. So Donald Trump, while he's been calling for the Federal Reserve to cut interest rates 50 basis points, 100 basis points, he couldn't do that. There would absolutely be no reason whatsoever, if the stock market is making all-time highs, which it has been doing anyway. But now you have this miraculous trade deal. So why would you need any more stimulus, monetary stimulus, just to further perpetuate the bubble and cause even more distortions and malinvestment? So if he makes a deal, he is going to sort of lose, he is perhaps lose the boogeyman of the Federal Reserve, whom he has been setting up for the past 2.5 years now. Most definitely the last 9 months aggressively because of what happened at the end of last year with the market sell-off of 20%. So politically speaking, he gets to keep a boogeyman. He gets to say, look, I'm fighting for your interest of the American people. The Chinese are tough. They're not going to give up on this. They've been ripping us off for 25, 30 years. They weren't just going to roll over, despite my optimism, despite my negotiating ability. They're tough cookies. They want to see if somebody else, Sleepy Joe Biden, can beat Donald Trump. If they think so, they're absolutely wrong, and they are really going to pay the price on the other side of that argument. Now, this is Trump, 100%. This is him. Mexico's going to pay for the wall. Mexico's going to pay for the wall. Mexico's going to pay for the wall. China's going to pay for this and that. So he can continue that argument. His base eats this up. So solving this takes away China as a boogeyman. It also removes the Federal Reserve from cutting interest rates. So if the market should turn down, who is he going to blame but himself? And of course, he's not going to, but now he's not going to be able to blame the Chinese because he just struck a beautiful deal with China. And why would the Federal Reserve have to have stimulus measures and emergency economic stimulus measures if everything's fine and dandy? So he runs the risk of boxing himself in once again. Does he care? Maybe he does, maybe he doesn't. Will he continue to blame somebody even if that does happen? Sure will. He will not take responsibility for anything. He will not declare or admit defeat on anything. I don't think this is good leadership. It's not leadership, in my opinion, but his base eats it up. They love it. So we're going to stay tuned on this, obviously. This is big news. It's headline news, and we're going to see what happens because Thunder Thumb says, there's trade talks and the markets still trade higher on it. Why and how is beyond me, but that it's just nonsense. We had Jay Powell, the chairman of the Federal Reserve, over in Switzerland last week, giving a question and answer session over there. Why not be in Switzerland? The land of chocolate and banks. Why not? He should be there, right? So he was talking, and of course, the Federal Reserve is not forecasting or predicting a recession. Oh, well, what a shocker. I was just waiting on pins and needles to hear that from the chairman of the Federal Reserve, that they are not forecasting a recession. I wonder when the last time was that they were forecasting a recession. Oh, that's right. They don't forecast recessions. Remember, Chairman Ben Bernanke during the great financial crisis before it, subprime is contained. It's a small piece of the housing market, and even if it does go, it will be contained, okay? Not even close. Not even close. And then this guy thinks he's a genius, goes to the zero bound, goes to quantitative easing 1, 2, Operation Twist, quantitative easing number 3, and now we're all screwed. So he thought it was contained. They weren't forecasting a recession. Now here we are, 10 plus years later. Business cycle was coming to an end, and we have another Federal Reserve chairman saying, well, you know what? We're not forecasting recession, and this trade negotiation, it'll be contained. You can't make this stuff up, folks. This is what these people say. I tell you, history doesn't repeat, but it often rhymes, and this is what we're seeing in our face right here. When you hear these people come out and say that everything's fine, when Donald Trump says it's jobs, 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 this is the greatest economy ever, he wouldn't have to say it if it was, especially not to the degree that he does. If there wasn't a recession somewhere on the near-term horizon, you wouldn't have the Federal Reserve coming out and saying that there's no recession. They just wouldn't say anything. They wouldn't even bring it up. But if you even look at some of their own websites, because there's district banks, you have a recession at a probability of over 30%. I believe it's almost at 38% that the Federal Reserve Bank of New York is predicting a recession in 2020 at 38%, and that is based off of their yield curve inversion model. You heard me, the yield curve inversion model, the difference between the 10-year Treasury and the 3-month Treasury. You know what the mainstream media says, you don't have to pay attention to it this time. No. See, even the Federal Reserve pays attention to it. It's just most people don't go and look at this stuff. Anytime you have seen the Federal Reserve using this model above 30%, it's been a recession 100% of the time. You can go look at this for yourself. So that's the Federal Reserve. That's their propaganda machine, continuing to come out and tell you that everything is fine. And we do anticipate that the Federal Reserve will continue to cut interest rates. They will probably cut by another 25 basis points here next week. I think the 25 basis point cut is going to be, again, another middle ground, even though we were told at the end of July that 25 basis point cut was a mid-cycle adjustment. Now that's obviously out the window. A mid-cycle adjustment would be, well, that's one and done. Now, only a month and a half later, they're going to be doing it again. So you have members that have come out publicly and say, well, I don't think we need to cut. And then you've had some other members of the board come out and say, well, I think we need to cut 50 basis points. So I think Jay Powell, trying to be the middleman, is going to say, well, let's just do what we did back in July and let's just cut by 25 basis points. Let's see how these trade negotiations unravel, and then we'll go from there. I think that's the best we're going to get. Or the worst we're going to get, however you want to look at it. It's not good either way. We also had some news breaking over the weekend and continuing today, and that is, of course, with the United States and Afghanistan. Donald Trump was trying to have a beautiful photo op at Camp David, a secret meeting with the leaders of Afghanistan and Taliban to say that we have struck a peace deal or some sort of negotiation where the United States can really start to transfer power to the Afghani government and to the Taliban. Of course, we've been fighting the Taliban for 18 years. They're even more powerful than they were 18 years ago. The United States has lost yet another war, costing trillions of dollars, countless number of lives, casualties, people displaced, but who cares? This is just the military-industrial complex in full swing, and as long as they're making money, everybody's happy. This secret meeting was supposed to take place. Again, it would have been a beautiful photo op for this president to take advantage of, but there was some violence over the weekend, and there have been further threats from Afghanis and members of the Taliban who are saying that Americans are going to die, death to America, all that stuff. And of course, the president removed that meeting, canceled that meeting. And so now, as far as the president is concerned, any type of deal is now dead. So what does this mean? Are we going to be escalating further in Afghanistan? Are we going to be there for an even longer period of time? You have to understand, ladies and gentlemen, I believe it was either this year or last year. I think it was last year. We bombed Afghanistan more last year than we have at any other time since we've been over there. And we've been over there going on 18 years, if you can believe it. We're going to be remembering the attacks on 9/11 here in a couple days, 18 years ago already, if you can believe it. So that is now off the table, any type of peace deal. Again, I applaud Donald Trump and his administration anytime he wants to reach across the table and talk with anybody about peace. Anybody about peace. Now, was this the best time, perhaps, to bring the Taliban over to the United States on the week of 9/11? Probably not. But if it was going to be done with a true effort in a true peace agreement, then I think some people would have said, you know what, there is some good that came out of something so evil and devastating 18 years ago. And, you know, he could have spun it that way, if you will. People still would have said, you know, not the right time, not the right place to do it. But nevertheless, anytime we can move in the direction of peace and prosperity, that's where we should move, because death and destruction is not what we need. We need more construction and prosperity. That's what we need. So if the president can achieve peace, I applaud him. These types of photo ops and these types of secret meetings, I just don't, I don't appreciate. But we'll keep you updated on this as well. And lastly, just to keep you guys updated, because there is saber rattling all over the world, and it doesn't just include the United States of America, it also includes some other countries. The one I want to talk about here real briefly is Israel, because we have Prime Minister Benjamin Netanyahu, who is also up for re-election. He is also in some hot water politically and legally, and his re-election poll numbers are not looking so hot right now. And so I think what we have now is a man who is sort of concerned with the political shenanigans that are going on, some of the legal shenanigans that are going on, and obviously perhaps losing an upcoming election, which he does not want to do. So we have seen some actual bombing of Lebanon going after Hamas. We have seen Lebanon retaliate. We have said that that was pretty much a declaration of war once Israel started to bomb Lebanon. You now have Benjamin Netanyahu out there taking to the airwaves saying, look, we believe that Iran has been continuing with a secret nuclear site to develop nuclear weapons. So he is out there saber rattling, trying to get his base back with him, that he is the strong man, that you cannot go with the other party's candidate over in Israel, that you need to stick with him, Prime Minister Benjamin Netanyahu. Now, could this just be political bluster? Could this just be strongman talk, flexing his muscles? Maybe, but it's not good, because you have a lot of dry tinder over there, and if somebody strikes a match, who knows what's going to take place. And I can assure you, if Israel gets involved in something, guess who's going to have to go over there to support them? That's right, us, the U.S. of A. Complete disgrace, disgusting, but that is exactly what would take place. So you got a guy who is struggling in the polls, and I tell you this all the time, when all else fails, take him to war, go to war. Read a history book. It's happened time and time again. So again, let's pray for peace. Let's pray for prosperity. Let's hope that this doesn't happen. But this is what happens when you have political figures who want to play the strong man, who aren't looking so good in their re-election campaigns. They're the strong guy. They got to be the tough guy. They got to be the bully. They got to throw their weight around. This is how they're going to do it. So, a lot we covered today. I know I haven't been here. We're going to continue with all of these stories, because not a single one of them, except for maybe Brexit, is somewhat on the back burner, simply because the UK Parliament has been suspended, so there's not really going to be anything out there unless there are some massive riots and protests that take place over in the UK over this month's recess. So we'll keep you posted on all of that stuff. The market divergences we're going to keep you updated on. Is this some sort of bull trap, meaning that the markets are rallying higher? That's going to get some people anticipating that the market's going to continue going even higher, and then boom, something's going to come out of left field just to simply pull everything back down. Your guess is as good as mine, but you know what? Stay diversified, stay vigilant, and stay with the Capital News. Thank you so much for joining me today, ladies and gentlemen. It's been a pleasure having you. As always, please like, share, subscribe, and get the word out. This channel is growing, and all it takes is a couple seconds to like or subscribe to the channel, whether you're listening on the Capital News, whether you're .com, whether you're listening on YouTube, iTunes, wherever you are. We do appreciate it. This is the Capital News. I am Alex Koritis. Godspeed.